Hello, everybody, and welcome to the MakerDAO Scientific Governance and Risk Meeting, number 121, taking place on Thursday, December 10th, 1600 UTC. I'm joined by a collection of maker-focused people, and we've got an agenda as usual for today. Just to do some quick preamble, my name is Long for Wisdom. I'm the governance facilitator at MakerDAO. Feel free to interrupt people as they're talking. We'd love for you to get involved. If it's a problem for anyone, then we'll let you know. All right. Cool. I'll briefly skim the agenda then before we get started. There's some sort of housekeeping stuff I'm going to go through in the intro. We've got weekly updates from each of the main domains and a couple of extras. We've got a couple of segments this week as well. We've got an introduction from Marvin, who I believe is the Kleros Maker Fellow that Amy has spoken about recently. We're going to have Vishesh doing State of the Peg. We ran out of time for him last week, so hopefully going to give him a little bit of an earlier slot this week. And then Hexanaut or Sam McPherson is going to give an update on the PSM implementation progress. And then we'll sort of just descend into anarchy and discussion, as we usually do. All right, cool. So I guess kind of housekeeping things. As I kind of mentioned last week, we're going to be moving the time for this call to 1 hour later. I think we'll start doing that in January, just because it's kind of a nice, clean separation, and hopefully it means that we won't get people confused when it moves. So next week we'll continue to be at 1600 UTC, and then in January we'll move to 1700. And the times will always reflect in the agendas as well. So if you're not sure, just check the latest agenda, and it will tell you. So also governance over the winter holidays. I mentioned this last week, but I'll repeat it again. We won't be having this call or weekly governance cycles for 2 weeks over the holiday periods. Those weeks are the week starting the 21st and the week starting the 28th, because that pretty much covers Christmas and New Year, and I imagine other winter holidays or secular winter holidays. So yeah, keep that in mind. I think that's the limit of my housekeeping stuff. So we'll move into the weekly governance updates. I'll start with governance at a glance. So let's see here. Cool, yes, there have been a number of active discussions on the forum recently. It's actually been getting quite a lot more busy, which is it's starting to challenge my ability to keep up. So if I have missed anything important, feel free to bring it up if it's something you're aware of. Starting with one of the most active discussions was on the rate change proposal proposed this Monday by the rates group. I imagine Primoz will maybe talk about this a little bit more in his section. But that's met some discussion, which is great. It's good to get feedback from everyone when crafting those proposals. Hexanaut or Sam McPherson continues to update the thread A Road to the PSM, which is keeping everyone up to date on the progress with the implementation of the PSM, which is good. I think it's going on very well, and as I said, we'll let him talk about that a little bit later. We also had an interesting thread from user Mago Crypto talking about launching Oasis on IPFS, so mirroring the Oasis site on IPFS, which I thought was an interesting kind of discussion, as it kind of opens the question of like whether the DAO is responsible for that mirror, I guess, or for the mirror of UIs in general, which is an interesting question. Let's see. Continuing as well, we've had the real world assets priority thread. Spin or Lucas from Centrifuge has continued to respond in that and sort of build excitement for real world assets, which we're all looking forward to over the next, hopefully, a few weeks or months. And then finally, DSS Gov Rewards thread, again from Sam McPherson, has I've seen a lot of comments from various people kind of discussing the relative benefits of rewards for locking MKR in the chief versus make a burn and a whole bunch of other stuff, which has been really good to see. In terms of signal threads, for the seeking consensus section, so the PSM parameter signal has been set up by Primoz to help determine what the initial parameters of the PSM implementation will be, assuming everything goes well in terms of implementation. So I'd encourage everyone to look at that because it's a fairly big deal. Then let's see, we had a signal request from Money Supply on behalf of the Vault Compensation Working Group. Just a little bit of a blast from the past at this point. But that signal request deals with reimbursing that working group for the hours they spent organizing the compensation proposals and kind of managing that process. So there's been some discussion in there as to the various things we need to consider when paying people from the protocol. It's worth noting this would be, well, depending on what else comes up, but this is the first signal request I think that is proposed, taking money from the protocol to pay for something. So potentially a landmark thing. So the only other two signal requests on-chain polls, which finished a little while ago, dealing with the ETH-B debt ceiling and the YFI vault options, which I think should have concluded. And perhaps someone can tell me what the results were, because I haven't double checked. So if anyone knows, please chime in. All right, looks like the Wi-Fi poll passed and the ETH-B poll passed, as did many of the other polls. In fact, I think all of the other polls that were proposed this week.
What did the stablecoin poll end up as?
Good question. Let's double check. Yeah, that passed 24,000 to 6,000, so 78% in favor. All right, I think that's the end of governance at glance. Other governance updates, as was kind of mentioned just before the recording started, we are still yet to successfully migrate to the new DS chief. Chris can maybe talk a little bit about that more in a minute. But yeah, if you haven't voted for or haven't moved your MKR from the old chief to the new chief, please consider doing so. All right. I think that's probably enough for me for the time being. Chris, do you want to give us a smart contracts update?
Sure. All right, everybody. Chris Mooney with the smart contracts domain team. So quick update for last week. We have the DS Chief 1.2 out. We're still waiting to launch it. We have 66,000, almost 67,000 MKR on the chief, so on that zero proposal. Once that has hit the 80,000 mark, anyone can go to Etherscan and call the launch function, which I dropped a link earlier. I don't know if everyone can see that link, but it's in the sidebar. So, so you just hook up your Web3 client, you can call launch, and that'll launch the chief. There's no delay after that. So we can immediately start using the chief with the next executive. So, and let's see, for collateral assessments, we did MIP 22 this past week. So that's the real world assets, specifically in this case for New Silver's drop tokens. So we did that. I think we're still working with Centrifuge and those guys to maybe make a few updates, but collateral onboarding for Kovan. So we have Uni, Ren BTC, and MIP 27, which is the debt ceiling instant access module or the debt ceiling auto line. All of that is in Kovan now. It was passed earlier today, so all of that stuff is active in Kovan and can be played with. I'll have an update into the updates channel in Rocket Chat a little bit later. And then we're still working on the DS exec lib. That stuff is still in review. It's actually finished. There's a lot to it, so it's a pretty hefty review. We didn't do any collateral onboarding work in the priority sheet, but I do think there was priority sheet work by another team, so we'll wait for that. And then for the domain team work, we've been working on MIP 21, which is the real world assets for success. Matt, is that the? Yeah. So anyway, that real world asset proposal, MIP 22, which is the one I mentioned earlier. And then we've been working on MIP 27, which is the debt ceiling instant access module. Naz did killer work, collateral onboarding, Uni into Kovan. Everything looked great. Sam, the same with Ren BTC into Kovan. And Sam is still working on the PSM. There was a post, just to clarify, there's a post in the forums about how the foundation isn't going to be involved with the PSM at all. So if anyone has that link to the forums, it'd be great to post that. So this is truly the DAO being autonomous here. So good luck, everybody. And for the coming week, we're going to be putting in Aave into Kovan, MIP 21 into Kovan, and the Uni V2 DAI F LP token into Kovan. And let's see, the Friday executive, which will be in I guess tomorrow, we'll have the polling results, Uni Ren BTC, and that MIP 27 DC instant access module will be what we vote on Friday. Presumably, the chief will launch by then. If it hasn't launched by noon on Friday, then the stuff that's scheduled for this week gets bumped, and we can't get to Aave, MIP 21, or the Uni V2 DAI FLP tokens until next year. So I don't know if that'll set a little urgency, but if you were sitting around waiting for something to happen, now's the time to put your MCAR on the chief to launch it. Collateral assessment work still needs to be done for TBTC, and then we still have outstanding domain team reviews for MIP 14, 17, 25, 29, and 30. As for the foundation, mostly we've been assisting with the really aggressive schedule at the end of the year. So we're not really like on our own tasks right now, but we're helping out. And also the foundation has 2 new smart contract team members, Tanner and Emilio. So welcome, guys. You're desperately needed. We're super psyched to have you. And that's it. Anyone have any questions?
Cool. Looks like no. Thank you, Chris.
Frank, you're muted.
Yeah, sorry.
Oh, go ahead, Frank. Yeah.
My bad. MIP 27, Chris. I'm just trying to understand. If you could clarify it, it's just going to be ETH, right? There's no Mooney.
Yeah. So MIP 27 is just going to be deployed with FB. So that's secondary Ethereum collateral type. We, I think, just want to dip our toe in the water with it and see if it works. And if it's functional, and then we'll possibly expand it out to other collaterals after that.
And that's not going to go on the next executive, right? Probably till 2021. Is that right?
Yeah, it'll be in 2021 sometime. So I think Risk will want to come up with parameters for each one of the different collateral types, and then we'll activate it then.
And with regards to the griefing attacks, is that something that's going to be, I don't know, I guess battle tested before being deployed on Kovan maybe?
Yeah, so so with regard to any griefing attacks, we're on FB right now, which means they're less effective. But I think the position that we're taking is that the benefits of having this sort of instant ability to adjust the debt ceiling and the ability that both upwards and immediately downwards, that both those benefits are outweighing the downside that a whale may choose to grief the debt ceiling on the downside, so to like hard cap it. FB is a really good experimental case for that. And if we find that there's griefing if griefing occurs, it's effectively no different than if we were at a capped debt ceiling on a particular collateral type, and we could deal with it, you know, within the next governance, or I should say, like weekly executive cycle. So, you know, that's always, you know, like I said, it's like no worse than that. So, yeah, and then you know, the benefits are pretty great because we don't have to spend as much like cognitive resources, risk, smart contracts work, governance cycles, like just constantly chasing the debt ceilings, you know. So
Sounds good, man. Thank you.
yeah.
About that, I just want to say that I'm a bit concerned that maybe the scope of the issue is a bit broader than just griefing, because it could be that it just naturally happens due to the kind of churn in the debt, and when the instant access module gets poked, that essentially the debt ceiling moves down a lot easier than it goes up. So like you could imagine some scenario where it was just always staying near the bottom range because of the dynamics without anyone even adversarially griefing it. So I'm just saying that that's kind of as we think about solutions for improving it for later. I would think of it as maybe not even requiring an adversarial situation to have it malfunction.
I totally agree with that, Lev. I think the initial proposal of 12 hours might be too long because of that concern. As people are pulling out as part of what they typically do, we would have to be expecting people to be putting in at the same rate. Otherwise, the ceiling is just going to keep declining. And if that's only 12 hours, it might be a while before we can bump it back up. I think the original plan and the design was to expect more like 1 hour to match the OSM times, so that we would avoid an OSM attack. However, I think that's a variable that's up to governance, and we would have to see it in practice.
Cool. Yep. Thanks for the discussion. I think that's. I think the main thing is going to just to see how it pans out, right? Like this is the kind of reason we're doing it with just ETH B, because it's a fairly risk-free way of testing it. All right. That brings up one other thing I should possibly mention, is that polls this week, there was one poll for increasing the ETH B debt ceiling, and there was also the poll for implementing the DCIM on ETH B. It's worth noting that the DCIM on ETH B will override the ETH B debt ceiling increase, to the point where there's not really any point in doing both. So given that they both passed, and assuming smart contracts is still fine deploying it, then we'll just do the DCIM rather than the ETH B manual debt ceiling increase.
I agree with that.
Makes sense.
Cool. All right, oracles. Have we got Nick here? Nick, do you want to give us an update?
Yeah, not nearly as much as Chris, but no, we this past week we had published the postmortem for the Oracle outage. I didn't really see much discussion or any questions about it on the forum, but if anyone has any follow-up questions, I'm more than happy to answer them. We also published the collateral onboarding assessments for 3 of the Uniswap v2 LP tokens, for USDC ETH, for DAI ETH, and for wrapped BTC ETH. So even though we've done all 3 assessments, right, the Oracle contract that we wrote for these tokens is kind of bespoke. And if we were to wait for an audit, before onboarding these LP tokens, right, it could be quite a few months. So the strategy that we've kind of chosen to pursue is that after we've done like some really careful internal reviews, is that we would release one of them with a fairly low debt ceiling, And essentially, that's now almost like a bounty, right? So if someone can hack the contract and steal up to that low debt ceiling that we set, right? That's essentially the bounty program that we're instating. So that being said, right, it would just be one of them. So I think it would be DAI ETH, and then essentially USDC ETH and wrap BTC ETH would be on hold until we either A, have more confidence in the new smart contract Oracle over time, and or B, get formalized audits completed. Let's see. Yep. So we've put Kovan oracles into kind of a staging environment. So far, everything seems to be working nominally. I've tried it against a few different LP pairs now, not just the ones we did the Oracle assessment for, but just some completely random ones, just to start checking that everything was working. Let's see. In terms of whitelisting, I think we have a proposal from YFI, from Jörn, on the Wi-Fi vault, that the polling vote for it was actually, I believe, 2 weeks ago, that had passed, and it didn't go into that week's executive, right, because we started the chief migration instead. So if the chief migration completes by tomorrow, and that's a big if, I think we're still about 14,000 MKR short. If that happens, right, then we can put it into tomorrow's executive. Furthermore, there's a whitelisting proposal from Gnosis for settling prediction markets. So the first proposal is for the ETH Oracle security module. But I've been talking to Christian, and I understand that there's quite a few more coming. So that poll will go live on Monday. And I actually think it's interesting that they chose the Oracle security module over the medianizer. Right, the Oracle security module just adds a delay, and it's only effectively updated at the top of the hour, like once an hour. So when you're a customer, you have this decision that you have to make depending on how you're using the Oracle price, right? And the decision is, do you want less latency? Like, do you want the Oracle to be more sensitive, or do you want the Oracle to be more secure? Right. So in the case of an Oracle attack, there's not really anything we can do to protect you from the medianizer value, right, becoming some malicious value. There are things we can do to protect you from the Oracle security module value becoming a malicious value, right? So there are different trade-offs on the scale of kind of security versus sensitivity. And what we've seen in the past is that the only organizations or projects that were using the Oracle security module were doing so because they were using it to manage their vaults, right? So they wanted to know what the price was going to be an hour from now, so they knew, that so they could basically not get liquidated, right? So Gnosis is actually the first project that seems to be using the Oracle security module that is not doing vault management. So I just thought that was rather notable. Everyone else seems to be taking the trade-off space of having the more sensitive Oracle rather than a secure one. Yeah. Sorry, is okay.
Do you have a question, Lucas? Not hearing you for a while.
Yeah, but I wanted to let you finish first, Nick. I wasn't sure if you were.
I'm pretty much done. Go ahead.
Yeah, so I wanted to pick up the conversation on the new Silver Oracle, because it seems like
the only thing there that is missing is the Oracle assessment. Smart contracts and risk are out, and sort of with the schedule over the holidays, I was curious on like what's what your idea on timeline is, and when you were thinking of sort of prioritizing that.
So I'm thinking following the release of the Uniswap LP oracles. So I've been putting in a couple months worth of work into that thus far, and we're basically on the home stretch. So all my attention is kind of focused on that at the moment, and then following that, I would be looking at the real world asset stuff and getting those assessments out. So
do you think it's realistic to aim for like a first executive of the year timeline, or is that and I'm asking because New Silver is like sort of getting ready to have loans that they can put in. I think like everyone sort of would love to see this happen. So I know it's like it's not your only priority, but sort of a timeline and would be super helpful.
Yeah, so I think I can get the Oracle assessment in before the end of the year, and then pending what kind of comes out of that executive, if it requires us, building anything new, right? It may or may not be the first executive when we get back.
Okay, thanks.
I'll just say from a governance
So
point of view.
maybe.
Sorry, go ahead.
Yeah, long from a governance point of view, what is the signal request for the first, or no, sorry, the polls for the first executive are what dates?
So the first polling week would be, I guess, the week beginning of the 4th. Whether smart contracts will be ready to implement something that went in that week on the 8th, I don't know. Usually they ask for like an extra week to manage the
Well, we could I mean, we could certainly start putting MIP 22 into Covan that week. So Lucas will work with you on getting that in Covan so that it'd be prepped for the next week for mainnet.
Yeah.
Okay, that would be feasible on our end as well.
Yeah, I would maybe say the 8th or the 15th. I think the 15th is probably more likely, but it's possible. People will surprise me. So.
Okay, cool. So, but Nick, super. That's great to hear. So, if it is out by the end of the year, then it will be able to go into the polls in the first week. That's very exciting. Thanks for that update.
Okay, cool. Nick, you're done, yeah?
Yeah.
Cool. All right, let's move on to risk then. Primoz, do you want to give us an update?
Yeah. So in regards to collateral evaluations, we only have one more plan to be released until the end of year, or potentially two. The one that we're still missing and is in progress is TBTC. The other two remaining collaterals were actually just published today. These were REP, BTC ETH, UniLP, and Consorfrite drop tokens. We also started looking at farmable CUSDC crop join adapter implementation, which is MIP 30, and it should be the next, probably the next focused collateral to be evaluated from our side. This one might need a bit more careful evaluation of economic risk, but hopefully we can have something proposed by the end of the year. On the real world asset side, Sebastian informed me that most of the work is currently focused on building monitoring tools for real world assets. And in terms of the other things we worked on past weeks, just going to list a few of them. There was, it was actually mentioned that there was PSM risk assessment published, mostly comparing PSM with current implementation of low liquidation ratio stablecoin wallets and comparing risks and benefits. I also published a signal on remaining PSM risk parameters, which needs to be decided. Long mentioned this. Parameters that are still missing are starting debt ceiling and stablecoins that are going to be included in the PSM. We also released updated risk premium table, and this served rates working group to propose rates. And this was actually done this week. Rates proposal report was published and should go into on-chain poll and executive if passed next week. We're hoping though that we'll be able to execute all of, I think there's about 10 stability fee changes in one executive vote on 18th, because there are also other executions planned, and we hope we block limit. And then finally, I also published risk evaluation on debt ceiling, instant access module. This was already discussed. There was this small issue. Yeah, actually, it was just, we're having a test run with TDB. Parameters were proposed from our side. And we'll see next year how do we move on to other collaterals. So for the next few weeks, as I said, we'll focus mostly on CUSDC prop join implementation. I also commented on B protocol proposal about Red Bitcoin B vaults, which at first look seems to be an interesting proposal, but we also need to get some feedback from other domains because the implementation requires some code changes on maker side. And finally, we'll be also monitoring, of course, whether all executive votes pass as planned until the end of the year, and if not, we'll potentially need to propose some parameter changes because of limited governance during holidays. So if something happens to stability fee being disabled on stablecoins, if they're not, we'll need to, for instance, propose a higher surplus buffer. We'll see, basically. But yeah, that's it from our side. If there are any questions.
All right, thanks very much. I think so there were some comments on the forum, I guess, about the YFI stability fee rise. We could comment briefly on that.
Yeah, so I made a signal, I think a week ago, and there were there were a few options, and the winning quote was actually to go with YFI B vault with a higher liquidation ratio. But since we can't execute this year, the next winning quote was to increase the debt ceiling to 30 million. And just by calculating risks and doing analysis, the vault type with such a debt ceiling was a bit risky, and the calculated risk premium was 10%. And this was the option that I choose. And of course, some people thought that this doesn't make sense because we're not going to see potentially we're not going to see 30 million debt utilization. And if you don't see that, 10% stability fee doesn't make sense. So I kind of agree with that. The issue was probably because this was the only option that I provided, stability fee equal to risk premium. What I think I should do next time is basically, just inform community about risk premium, but then it's actually up to community to decide, whether this already implies we're going to see lower debt exposure, and that's why we should already initially propose a lower stability fee that equals lower risk premium. And then at the end, we actually proposed a lower stability fee in the rates proposal. We did another calculation of vault type. There was a bit better collateralization ratio, and we got with 9% risk premium, and this was the rate that we chosen. But yeah, it remains to be seen. Like if we see a lot of vaults being a lot of repayments and debt exposure decreases, we'll probably need to go lower with stability fee again. So it's it's always trying to find this balance, and it's not necessarily easy to already kind of assume what's going to be exposure in advance and then apply the applicable stability fee. Yeah, so for next time, we learned something, and for next time we'll probably choose a bit different methodology. But as I said, the initial problem was Wi-Fi B vault isn't doable. That's why we needed to go with this.
Cool. Yeah, thanks for that very much. I think we saw the on-chain poll for Wi-Fi pass, right? So I don't think mega orders necessarily disagree with the outcome, right? Like they signal that they agree. So I don't think there's anything too much to apologize for, right? But yeah, I agree. Maybe having more options in the future might be good. All right. So maybe move on to community development and operational supports. Amy, do you have anything to update us on this week?
So I just, one of the pieces of the support domain is also to keep the health of the other domains and keep everyone updated. So I did want to bring up a concern that I know has been discussed, but really around this domain team burnout. I just wanted to kind of remind people and any new community members as well that we're kind of smack dab in the middle of this transitioning of the core responsibilities from the foundation to the DAO. And the foundation is quite limited in its ability to support certain things, as you can see in cases like PSM. So I do see the teams juggling like core development work, new features, MIPs, monitoring, onboarding new contributors. And then there's like a bunch of less obvious things that take away attention and time, like optimizing coordination processes and being able to communicate with the community and going on the forums and things like that. So just for context, I did want to highlight some of the things. The smart contracts team, for example, has been onboarding like 2 contributors, Sam and Naz. Risk has onboarded around 7, I believe, contributors, and then working on 2 risk tooling grants. So, and then we have now 3 kind of proposed new facilitators, Juan, Seb, and Sam. So thinking about how we are shifting to becoming more responsive rather than reactive, and then kind of continuing to be intentional in the way that we're scaling and nurturing quality growth, that it just takes a little bit more time. So all this being said, the work is set for this year. Next year will be another exciting year, but I think we should really consider slowing down to be able to speed up a little bit. And so that's kind of something that I wanted to share with the larger community. And that's it for me.
Hi, Amy. On that subject of slowing down, so as the DAO is going to obviously be the front runner, right? Are you planning on in 2021 to kind of give the community an update on how things are going to work when the DAO does take over, maybe in, I don't know, 2023, 2022? Like, are you and Juan going to do like community calls like this, where you're going to kind of explain to us how it's going to work, where we're going to get to retain people like Chris Mooney, like Nick, et cetera, and you, by the way. So, yeah.
Yeah, I think if it all goes, our best case scenario is that everybody who's currently working the DAO, and we're just kind of ushering this like smooth transition is what the goal is. I think it will continue. For example, I may leave the foundation, but continue my work as a facilitator. What it means to actually, we call it kind of like building rockets. Like each of these teams are going to then be kind of working for the DAO in its own form. So there will be support. Juan and I will be continuing to support the domain teams. We'll be communicating a lot more. Juan is also taking a lot of great initiatives right now that are bridging a lot of these kind of transitional moments. As I said, with the foundation, I think we're limited to what we can support, and we're kind of helping just kind of bridge a lot of the main core responsibilities, and then be able to communicate that. So you'll see next year, I think we will give a little bit more reporting to, okay, what does this mean for the DAO? How's the DAO supported, et cetera, coming from just like from the support domains specifically, not necessarily from a foundation point of view.
Cool.
Did I answer your question?
Yeah, totally. And I guess with regards to like tools that's going to be needed, I guess you're already doing the research on that. Because I was in some whatever seminar, and some former FBI guy was talking about moving to a decentralized state, which is kind of weird, right? Going from FBI to now building software tools for decentralized organizations. And yeah, so it got me thinking last night, like, what are the things that are going to have to be implemented to run the DAO and, get everybody paid, and how do you think about like benefits, right? Like, do people need, besides MKR, do people need and do people need like a 401k in the US, in Europe, whatever they call it? things like that, health benefits?
Yeah, exactly. I actually just got off the call with Opolis, and which they're kind of building this network. So I think it's being able to pull different resources, going back to what you were saying about the FBI guy. So we have to think a lot about also like tech ops and DevOps, and that's something that we're actively thinking about. And it is one of those things, like, it's strange to think of it in a decentralized way. So what is the processes for that happens in a kind of trusted and trustless way? That we're definitely thinking about it. I'm also speaking to a lot of kind of legal, like, we're trying to get some other legal community members involved. Marvin, who's going to speak and introduce himself in the beginning as well. So it's all kind of right now research phase, and we're trying to gather the most resources up so that we can share with the community.
Nice. Bright future ahead. Looking forward to it. Thank you.
All right, yeah, thank you both. All right. Juan, do you want to do a quick update on the calls you've been organizing recently? Wait, it's Juan here. Wait, it's cool.
Yeah, we had a pretty busy week. So on Monday we had a really interesting call with Lev and Rain, where we went through the second Know Your MIP. It was very interesting. We covered MIP 30. Well, I guess they covered MIP 30. I was more on the question side of the discussion. So the farmable CUSDC adapter, i.e. the crop join that was mentioned previously, I think by Primoz. So that was Monday. On Tuesday, we had the B protocol team and also NAS from Yfield.network. They quickly, well, they presented their project and the collateral. And yesterday we had Mona from X-Melon protocol, which they're being renamed into Enzyme protocol. Also very interesting. I'm going to post the links on the sidebar. Next week we will have a real world assets wrap up kind of thing. So Seb is going to be there, Lucas is going to be there. There are going to be 3 asset originators, and we're going to have like a look back on 2020 and what's coming for 2021. The 3 asset originators are Harbor Trade Credits, People's Company, and Fortunafy. So I'm expecting a very interesting call there as well. So that's Wednesday the 16th at 6 p.m. UTC. And yeah, a little bit echoing what Amy was saying while I was writing down summaries to wrap up. I think it's quite impressive to look back at what each team of Maker has accomplished in the last couple weeks/months. It seems that time is flying. So I think it's good what we're achieving, and we need to also celebrate what we're building, and not only rush towards the infinity. But yeah, that's pretty much it. If there are any questions, let me know. Otherwise, back to you, Long.
All right, thank you, Juan. Right. I'm not sure if Charles has a MIPS update this week, given the monthly cycle isn't taking place in December. Charles, do you have anything you want to talk about? Or?
Yeah, I have a couple things, but as you mentioned, because there's no governance cycle this month, it is quite short. So I'm just going to give a verbal update today, but I will be posting a update as usual on the forums. So a couple new proposals came in, as Amy mentioned earlier, for some domain team onboarding. So Sam M has proposed himself as a smart contracts domain facilitator, and Seb Ventures has also proposed himself as a risk team facilitator, which is pretty awesome to see. In terms of some new pre-MIP discussions, we had a couple come up. So there's one by Matthew Rabinowitz for throttled surplus buffer, and some ongoing discussions that are still pretty active is on delegation of authority and real estate tokenization. and of course the Liquidations 2.0 technical summary. In terms of just some quick collateral onboarding updates, there were 3 governance pools for collateral onboarding that went live on Monday and have passed today for Aave and Uni USDC ETH and Uni DAI ETH. So there are now 7 collateral types awaiting an executive vote past the governance pool stage, which is REN BTC, RWA, aka 6S, Uni, Aave, D2, Uni, LP tokens that I just mentioned, and PAX-G. And the executives scheduled for them are one on December 11th for Uni and REN BTC. And then on December 18th, there is the executive for the RWA 1, 6S, Aave, and then the Uni LP token for DAI ETH. And the rest have been unscheduled, but are awaiting an executive. The community greenlight polls for December will be published on the 4th, so that's on Monday, and will end on December 28th. And this month, they cover DPI, wrapped Filecoin, and wrapped Zcash. So that is my update for today.
Great, thanks. Yeah, it'll be good to get back into the cycle and things in January. All right, I think that brings us to the end of our updates, 50 minutes into the call, which leaves us moving to our segments. Marvin, I have never met you, so apparently you're going to introduce yourself. Are you here? I see a Marvin Coleby.
Yes, I am. Yes. How you doing?
Awesome. Yeah, I'm doing well, thank you. How are you?
Nice to meet you. I'm good, man. Nice to meet you. I've read quite a few of your posts. It's a pleasure to meet you as well. Tell me if you can't hear me at any point. My connection is not as strong as I'd like it to be. But it's nice to be here and all of these intelligent people on the call. Thank you for having me.
Yeah, I can hear you just fine for the time being. I'll let you know if you drop out or anything.
Please do, not a problem at all. So is this a part where I kind of introduce myself?
Yeah, go ahead.
Awesome. Okay, my name is Marvin. Let me share my video. That's in this remote life.
Cool.
Still hear me?
Yep.
Cool. Hi, everyone. Nice to meet you. My name is Marvin. I am lucky and feeling the immense burden of being one of the people that contribute to this community to build out this kind of infrastructure for real world assets. A bit about myself. I'm originally from the Bahamas, a small island in the Caribbean. And I am based primarily in Nairobi, Kenya. I'm currently in Addis Ababa, Ethiopia. I travel around the African continent. And one of the things I do and one of the things I'm passionate about is a company called Raise, which I'd love to demo for a couple of seconds if you'll allow me. And at Raise, we started Raise 2 years ago now. And the goal was to build security tokens and real world assets. That's funny. If you know the Bahamas, it's the offshore entity tax haven. We don't call it offshore. We don't call it tax evasion. We call it offshore financial center. One, that's the fancy way of saying it. So we started Raise 2 years ago. And the goal was to build out a security token platform in 2018. We thought 2019 was going to be all the rage for real world assets. We were wrong, very wrong. So what we decided to do was build out a platform that simplifies diligence of real world assets. And so we built it out for the last 2 years. It's in a good place now. I'd love to show it. But yeah, we kind of bided our time to build out infrastructure to basically do due diligence on companies before they would launch, to almost eventually create almost like a database oracle that would link to smart contracts eventually. And it seems like we're finally here. So that's what I do. That's what I spend most of my time on. Otherwise, I'm a securities lawyer by trade. I've built out and designed legal systems before, legal policies, investment policies. And yeah, man, I spend a lot of time in the crypto community, and I'm happy to be here. And for more context, yes, that's correct. So let me know if there's any questions. Happy to share the platform on a share screen for a couple of seconds so you get a sense of kind of what I do on a daily basis is build security software, real world asset software.
All right, I can make you co-host if you want to share your screen briefly.
I do. It'll take 2 seconds. So tell me when you can see my screen for something called like Acme. Where am I? There you go. You can see the Acme thing, Acme Technologies.
Yep.
Yeah, so we're called Raise. What we build is securities infrastructure for the African continent, which is where we focus our time and energy in the capital markets here. So what you're looking at is a live version of a Raise platform. 2 years ago, when we started out, the first thing we said was, how do you build out security token real world asset infrastructure? And the answer was really obvious to us. It was like, first you have to digitize this stuff. A lot of people are talking about real world assets, but a lot of stuff doesn't even exist digitally. Deeds are still paper-based, especially in Africa. Share certificates are still paper-based. So the first step we started out with to digitize it. So what you're looking at is a live version of Raise. There's kind of 3 components to what the platform does. We have one tab that's focused on organizing kind of like corporate structures and subsidiaries. So here I can store subsidiary data. I can file annual return for subsidiaries as well as documents and board members. I can track who's on a board, who's not on a board. Most importantly here, we structure the asset data for private companies. So here you see a list of find demo shareholders, and all of the different assets are stored here. So for Yele, for example, we'll store his common shares. We know exactly how many common shares he has. Each shareholder is tied to a email, and each of the different certificates, anything that passes through the Raise platform, because we focus on private companies, we create an electronic share certificate. This is a visual representation of what you see in a centralized currently database that stores asset data, programmable assets for private companies. So we create that for each one. We store all of the rights and preferences. Basically, we digitize an entire corporate structure. And what we started building out this year is basically like a, I guess some people will call it a security token issuance platform. But here, this cap table that you see previously is connected to something we call a deal room. Give it a second. And from this deal room, what we do for a company is we kind of like structure all of its diligence data. So here are the terms of a round. I can change out the different terms and add. In this case, it's a convertible debt. Since the cap table data is connected to the actual deal room, investors can simulate, understand exactly what the investment could look like in the future into a private company based on actual company data. And all of the diligence data, the cap table data is organized and structured in this deal room. And from this deal room, companies and documents and all this stuff that I could go on forever, but I won't. You can invite investors. Those investors come in after you've invited them, and they can invest into the company directly through the platform. When they invest, we update the cap table here that you see and issue an electronic certificate. So that's kind of what a platform is currently, to get a sense, but that's what I spend a lot of my time doing. That's what I have been spending a lot of my time doing. And that's the context in which I think hopefully I'll be a helpful fellow, because we have a team that only thinks about securities all day. All I think about is real world assets all day, and how they hopefully will not disrupt the financial freedoms and the crypto, especially for the MakerDAO community. So hope that was a good little introduction to Raise and myself. Happy to meet everybody. Thank you again for the time. And thanks for the kind messages.
Yeah, no problem. It was great to have you. Looking forward to seeing the outcome of that, the fellowship.
Me too. Me too. Thank you.
All right, cool. Now I believe Vishesh is here. Vishesh, would you like to do State of the Fig? I believe you would double length segment if you'd like. Oh, maybe he's stepped away for a moment. Oh. You there, Vishesh?
Can you hear me?
Just about. You're a little crunchy there.
Yeah, I dropped my headphones.
That's what happens when your battery goes to 1%. It starts scaling back CPU cycles.
Hey. All right. But you can hear me fine now, right?
We can hear you fine now, yeah.
Okay. All right, so let's share screen here. All right. So at a high level, where we're at is, many celebratory tweets and whatnot crossed over a billion DAI. So still around 430 million from ETH A. We're up to about 10 million from ETH B. That's pretty much capped out. 3 million from BAT, 420 million from USDCA, tiny amount from USDCB, up to 113 million from WBTC, 52 million from TUSD, smaller amounts from KNC, ZRX, and Mana, and then 18 million or so from PAX, and smaller amounts from USDT, Comp, LRC, 5.7 million from Link, and 16 million, 17 million now from Wi-Fi. So just to touch on where the DAI peg is and has been at. So what we've seen is kind of this long-term consistent price around $1, and that's been a fairly confirmed meme for a while that has come down in the past month, say compared to 2 months or 3 months prior to say $1.06, $1.07, but that that peg has moved a little bit during certain time frames. So what we've seen basically is there were instances of a few large trades executed at extremely elevated prices, and so these were kind of specific instances that warranted double clicking on. So this one in particular is kind of interesting. So looking to this, so what it turns out is there's a particular transaction. The short answer is arbitrage, but there's a particular transaction which was part of a series of transactions that daisy chained a bunch of trades in the process minting, in the process exchanging 90 million DAI on Curve for USDC, and then basically trading back that DAI. And the top level of this trade was there was a rather large flash loan and swap, which was basically, you can see here, this is a pure arbitrage opportunity that the trader was seemingly attempting to take advantage of. So something to double click on further if people are curious, but the long and short of it is that's what these blips are. If we look, however, at the last 14 days or so, you see that this price has been fairly consistent around, say, 1.007. And the other thing to note is that the volumes on that have been a bit higher in the last couple of weeks than they were, say, a month ago. So there's been some amount of uptick in that trading activity there. It's also a bit more distributed onto multiple different sources, say, than it was prior. It was a bit more just dominated by Uniswap and then secondarily by DYDX. So, what you see here is still a lion's share, obviously, is Uniswap. But we also see this decent chunk for SushiSwap, and DYDX seeing like a slightly diminished proportion of the trades, and then Coinbase seeing a very, very slight uptick, even though it's a small amount overall for the DAI ETH trades. The USDC graph basically echoes these price movements, but with a dominance of the trading occurring on Curve. So if we look at some of these vaults, basically right now we see that for ETH, the largest liquidation wall right now is around $418 with roughly 120 million DAI. If you see here, the largest single chunk of the ETH portfolio is 103 million, and that is, you know, roughly around 200% collateralized. So you see the largest ETH vaults, 56 million being the largest one at 320% collateralized, 18 million at 380% collateralized. So at least for, you know, this 70 million chunk at the top of the sheet here is fairly well collateralized. I mean, the highest risk scenario in the top few is this 17 million vault with 200% collateralization, and then these two 13 and 11 million respectively at 200% collateralization. Beyond that, it's a bit of a long tail aggregation of vaults adding up to this column here. Other thing to touch on, let me take a second to update, is so for ETHB, now we're actually seeing some traction in this. So 2.6 million is the largest ETHB vault with a collateralization around 190%. Makes sense that we see lower collateralization ratios in this bucket. But, you know, there's kind of a curvature first, which is, you know, interesting. And then there is a slight wall at around $380 per ETH. And that's a projected liquidation of 7.7 million. So nothing too crazy there, but there is clearly appetite for these lower collateralization ratios. Additionally, to USDC. All right, again, may take a second to load. But yeah, so if we look here, yeah, so you can see that basically there's a projected liquidation amount with a price of 1.00 something above $1. So the nuance of that is, if we look at these vaults, as has been discussed prior, you have a lot of vaults that are basically at a distribution of 100.1 to 100.8% collateralized. Some of these largest chunks now, and I said I would blast this out into more detailed decimal places, but you can see from the table basically that you know, even the top 5 to 7 vaults there, you know, if you add that up, that's, you know, roughly 200 million DAI. That is 100.1 or 100.2 collateralized. And then basically that's a continuing meme throughout some of the smaller vaults. So, you know, this is a situation that everyone is very clearly aware of. The total amount of DAI that is the total amount of DAI that is below 1.01 collateralization is, or 101% collateralization is roughly 400 million at this point. So that is a continually growing situation, as was discussed over the last couple of months, I would say. So that due date for crossing 100% collateralization is ever rapidly approaching. Other items to note, so WBTC. So basically, you know, chunk liquidation of 78 million at a 14.2 thousand price. So just something to keep an eye on, especially as say market's a little bit more volatile in the last week or two. And in the event that there is a significant downswing, you could see between this and other assets, large amounts of liquidations all at once. Part of the risk scenario there is that there hasn't been a huge, that there has been some rebalancing of collateralizations as the nominal prices of assets have risen. So obviously, people like to book profits, etc. And there's been some perceived stability in those prices. So I think people have felt a little more comfortable adjusting accordingly. And if it drops back down, then that's your massive liquidation risk scenario. And right now, those nominal amounts of liquidations are very, very large in that, and this is an analysis that somebody could do, the ratio of issuance versus market liquidity is probably very, very high right now. So for YFI vaults, we look at, this is dominated by one large vault, as most people are aware. That's 10.2 million. That's roughly 220% collateralized. So that's your projected liquidation walls, 11.6 million at a price of roughly 19.9K. So that's something that very recently could get liquidated. All right, I will leave that there unless there's specific assets that people want to touch back on.
Hey Vishesh, and I guess we kind of have an idea who these large vaults are for the WBTC, A, and the YFI. Like, in other words, I would imagine there are large institutions or VCs or whatever, or hedge funds or, crypto Twitter influencers that can load up, and it wouldn't matter if gas prices are 1,000.
So in terms of gas price, I mean, we know that some of the usage of like WBTC, for example, is, let's say, managed positions, like through protocols, large companies, DeFi company issuance, etc. But I mean, if the question is, would a potential crash event creating a bottleneck on gas cause issues with liquidations in WBTC or ETH? The answer is it's possible. It's like, especially if you consider the state of the market right now, and you consider that multiple different collateral portfolios have seen tremendous amounts of issuance in the last 90 days or so. And you consider that in nominal terms, gas prices are pretty high. If you adjust for inflated ETH price, those gas prices are lower, but that's been a discussion that's been had, on crypto Twitter as well, is in what ways should we measure gas? So the end result is, in a crash scenario, if there is a crunch on gas, yes, there is the risk of running into issues. And individual positions being managed positions doesn't necessarily mitigate that entire issue, because as we saw, for example, for ETH, though there are a few large positions that fall into some of these buckets, actually some of those larger positions are the better collateralized positions. And so, you can see, like, there's a mix. Some large positions are, say, at 200% collateralization, but others are significantly higher. So there would be a significant amount of DAI liquidated if there was a market crash. And I think in the event that occurred, there would be a crunch on gas prices, and yes, you might run into some issues. So that's something to consider.
Yeah, and I guess part of that question was if, do you have confidence yourself, and this is your opinion, of course, and no one else's, do you have confidence that some of these large holders can man up and deposit more collateral?
I do not text with these large owners, and so I couldn't say.
Got it. Okay, cool. Yeah, so I guess my thinking is if Mnuchin wakes up on the wrong side of the bed tomorrow morning and decides to do some funky stuff, I guess, yeah, like you said, we could have a flash crash. And I'm just hoping, I guess, these guys can man up and deposit some collateral. And that wifey, the 900 YFI, is that like someone that we know or not really?
The large Wi-Fi vault, I do not right now remember who owns that one, but someone in chat might.
Cool, yeah, maybe Alex. All right, thanks, man.
Yep.
I would just add that keep in mind we have the litter box set to 15 million DAI. So even if one of those large vaults was liquidated, the maximum amount of DAI that could get bid in that time period is 15 million.
Yeah, it would be an exciting 24 hours if we
Yeah.
got 100 million BTC DAI liquidated.
So just to play off that, I mean, the realistic outcome you would initially expect, like long term, it's the same amount of sales that you have to deal with, but the initial impact is probably that if there was such a gas crunch or mass liquidation event, you would basically just have a bunch of stalled liquidations. That's the first order effect.
Cool. Okay, maybe we can move on because we've still got one more thing to cover. So as I think most people know, Sam has been working on getting the PSM implemented and audited and things recently. Sam, do you want to give us an update on how that's going?
Sure. Okay, so since last week, Primoz has submitted his risk analysis as was expected. On the smart contract audit front, yes, as Long for Wisdom said, QuantStamp has agreed to give us an express audit, which has a target end date of the 18th or the 19th. Hopefully it will be the 18th. And if all goes according to plan there, we should be good to push things out next week in the 18th executive, of course, pending this executive going out this week. So Primoz also set up some risk parameters polls. So as of right now, the one that's winning is a 500 million debt ceiling for USDC only to start. And we add in some of the others later on in 2021. And the weighting is current, these are currently winning polls. It doesn't close until tomorrow, so people can change their vote or whatever. Currently winning is USDC having at least 50% of the weight in the PSM deployments. So yeah, the spell is ready. The contracts are on Coven. Barring some unforeseen circumstances, we should be good to launch next week as expected. Is there any questions?
I guess I'll just add one clarifying question. I believe in the signal request it mentions that if 500 million or 750 million debt ceiling were chosen, then we might consider reducing the debt ceiling on the other stablecoin vaults.
Yeah, yeah, Primoz put that up to on contingent on over 500 million winning. We would zero out the debt ceilings of the current stablecoin low collateralization ratio vaults. Makes sense to me. The PSM is strictly better.
Cool. All right, so yeah, if anyone has any questions, I guess on that topic, feel free to ask.
Oh, one thing I forgot to add. So when it gets deployed, there is an additional module called the LERP module, which will move the TIN parameter from 1% to 0.1% over the course of a week. So we can maximize fee collection as arbitrageurs pick that up as it goes down.
How exactly does that work, by the way?
So when the executive spell is crafted for next week, it will launch the LERP module, which anybody can just call, and it will just, depending on how far in time it is from the launch date, it will just set the TIN parameter lower and lower and lower until we hit our target value of 0.1%.
Got it. Thank you.
Yeah, and presumably we'd expect to see market makers keep that relatively up to date, so they would pay less fees using the PSM or arbitrageurs.
Yeah, they'll likely, whoever's arbitraging on this will want to code that in to call that as you're arbitraging. The LERP is going through the audit as well.
All right, we're coming up on the past. So we should probably consider closing this off soon. One question that Greg brought up earlier was that we could potentially consider delegating the ability to do Oracle whitelisting to the Oracle team. Not sure we really have time for a full discussion of that now, but if anyone does have feelings about that, feel free to create a post on the forum. I think Nick and I discussed it a few months ago at one point. I mean, is Nick still here? If Nick has any thoughts, maybe you can briefly share them.
I reserve judgment until the future.
Fair enough. Cool. All right, so I think we'll leave it there then. As we did last week, and as we'll continue to do going into the future, I will leave the meeting open after the recording stops. So if anybody wants to continue discussions about anything, feel free. But yeah, thank you everyone for coming, and I will talk to you all next week.